Hey everybody, Joshua Phillips here with Churchill Mortgage. It is April the 10th. I hope your spring is off to a great start. I'm looking out the window and it looks gorgeous here. Hopefully it's going to be a beautiful weekend for you as well. Maybe you're going to be out looking at houses this weekend or maybe you got a house to sell and you're going to be having an open house. But regardless, hope you have a lot of success. Well, again, I'm Joshua Phillips with Churchill Mortgage. And I represent the Phillips team here at Churchill Mortgage. There's also my wife Amy, my son Jesse. We are the Phillips team. As I always like to say, if you're working with the Phillips, you're in great shape. We are here to help and help make it an excellent experience for you. Well, let's get to what's going on. Well, as you saw in the thumbnail, we got mortgage rates bouncing back. Now, the image is a little bit of an exaggeration. We're not really at party time, but we are starting to see some bounce back with mortgage rates, which is great news. And here's the deal. We all know this. It is all coming down to our right now to our conflict with Iran. The whole Strait of Hormuz is something we've never even talked about before, but what's happening there and with oil and oil prices. And of course, right now we've got this ceasefire happening. So, we're seeing it in all the markets. I mean, you may be checking the stock market, the Dow Jones, which is, recovered, a couple thousand points from its low. Or you could look at, gold prices, which are up, or the bond yields, which on the whole are better than they were. We talk about the 10-year Treasury note. Let's just pop in here. I know this is nerdy information, but we saw the 10-year Treasury yield pop up to what 4.44, and now it's down to 4.32. Now we're still a long ways from the 3.95 we hit back at the end of February. So we still got a ways to go, and that's what I'm mainly going to be showing you here. So let's pop over here to mortgage-backed security charts, which I always like to say that every professional mortgage loan officer in America has a chart like this on their screen. We check it all day. We get updates here. And this is mortgage-backed securities. Mortgages are bundled and sold as securities into the marketplace. The higher the price of the security, the better mortgage rates are doing, and the lower, of course, the worse mortgage rates are doing. Also, green is good, red is bad. So let's take a look at this chart right here, as we always do. And boy, we were on a nice run up until the end of February. Let's see, what was the date on that? Right at the end of February. And then, of course, we started this, bombing campaign against Iran, and it was just worse, worse, worse. And we kind of hit our worst day back on March 27th. Well, look, we've had some green since then as mortgage-backed securities, and things have settled down just a little bit. Now, we still have a ways to go to get back to, we're 100 basis points away from seeing mortgage rates perhaps getting back to where they were prior to this conflict starting. Now, we have no guarantees, obviously, that's going to happen, but it certainly is the hope that as things hopefully settle down, who knows what the next crisis might be, but hopefully we will see things settle down, and maybe we'll see mortgage rates, mortgage-backed securities continue to improve, mortgage rates go down a little bit. Let's go one last place here, and that is to Freddie Mac's primary mortgage market survey. This survey has been around for like 50 years. It does lag just a little bit the market, the reality of the marketplace, because they're doing a survey and then putting out results. So it does lag a few days. Well, let's see what this is saying here. Now, this is saying that we saw, according to their survey, mortgage rates, 30-year fixed mortgage rates dipped under 6% back again at the end of February, but then shoot up to about 6.5%. So about that 0.5% jump in interest rates in the month of March. And, we're seeing again that little tick down, about 10 basis points. Hey, room for celebration here. Now, if you look back over the year, we're still better. We're still better than we were. We're still better than the 6.89 we were at back in May of last year. So, I mean, we're still much improved. Would love to see things get back. Again, so much is going to come down to how things go with Trump and Iran and how all this shakes out. I know I would say pretty much all of us would love to see this get resolved, but that's what we're waiting on to happen. So fingers crossed. if you're looking at homes this weekend and you need some advice, we're here to help. You can reach out to, again, myself, Amy, or Jesse. We are here to help. You can call us. You can fill out an application. We can work on a pre-approval for you. If you're in the market to refinance, I think you're just you just need to wait, unless you're just in a more desperate or need cash out or some other reason. But probably for most of you, you need to kind of wait this out. Minimum probably a few more weeks. Get things resolved and mortgage rates decline back down. All right, take care. Have a great weekend. See ya. Bye.